Hi there, everybody. This is Craig at Max Trading here with Eusebio today, and it's a pleasure to welcome you to our real-time trading session. It's good to have you in the room with us for the non-farm payroll news release, which is coming up in about 14 minutes or so. Eusebio will explain the conditions that we'd like to see, and if we do, then we have a really good chance at great trading conditions. And if we don't get good price action, then Eusebio might choose to force a trade, meaning that he would enter a trade that max traders would ordinarily not take. In other words, it's a trade that we know is too risky, but the trade is entered only so that you can see how max methods protect the account and take advantage of any potential good price action. Of course, we never know what numbers we'll see in this news release or any news release, or how the market will react to it. And it doesn't always seem to make sense. Sometimes we just don't know what's behind the movement. But we look forward to showing you how max trading methods take advantage of movement that becomes available in the marketplace. And what I think is even more important, how our risk management protects the account balance. And would you please remember today that this is not a trading room. We are not providing trade calls. Nothing you see or hear can be taken as entry recommendations. Everything, all of it, is for educational purposes only. Eusebio is here to show us his charts and lead us into the trading conditions for this NFP session. I know some of you have never met Eusebio. It's your first opportunity today. Glad that you could be here, and you will soon discover that Eusebio is a highly skilled trader. And I think you'll quickly sense that he really enjoys helping his fellow traders, and you'll have opportunity to listen and watch carefully and take advantage of his knowledge today. And I hope that you'll feel free to ask any questions that you might have. Just use the question panel in your GoToWebinar software there, and we'll try to make sure that every question receives an answer today. The methods that you will see are those which are taught in our Max Trading courses, which you can begin anytime taking advantage of our videos. And we'll provide very nice discounts for those who are attending the webinar today, or those who take time to watch the video that we'll be sending out, the playback of today's session. And I'll make sure that you get those links as well. Eusebio, I think that's everything we need to get going this morning. So thank you again for sharing your time with us today, and the microphone is yours.
Thank you very much, Craig. Hello, everyone. Nice to see you. And let me take the opportunity, we are at the very first days of January, to wish to all of you and yours a very happy, healthy, and wealthy New Year 2019. So, and I wish you excellent trades so during the entire new year. Well, so with the non-farm payroll, we have an important big news release. Sorry, I will often cough, because yesterday I caught a small cold when I was walking outside with freezing weather. So I apologize for that. So with the non-farm payroll, so we have the first economical news release of each month, and it is one of the most observed news releases by all the institutional traders, big boys, and so on. And so it must be considered extremely carefully. When we observe the non-farm payroll releases over years, we can observe that we have directional and sustainable movement when we have a big deviation, so on the non-farm payroll. And by the way, we have the non-farm payroll on two currencies, the CAD and the US dollar. And a big deviation with the non-farm payroll is a deviation of at least 25% approximately. And so the scenario is the following. So for the non-farm payroll, the US dollar, we have a forecast of 179K and an unemployment rate of 3.7%. Both news are always to be considered together and in agreement. This means that we will have a big positive deviation if the non-farm payroll change is larger than 220, 230 Ks, and the unemployment rate will be smaller than the forecast, so less than 3.6%. We need to have a relevant difference between the two numbers. If this happens, so we can go long the US dollar. For example, with a pair like the pound US dollar, we can short the pound US dollar. On the contrary, if the non-farm payroll itself is too small, 130, 140 or less than the forecast, and the unemployment rate larger than 3.8%, then the US dollar should weaken. And so we can short the US dollar. And so, for example, going long with the pound US dollar. And we have similar scenario with the CAD, with different numbers, of course. And in all other situations, I consider this is not a tradable situation because we will not get most of the time, as I say, directional and sustainable movement. So when I say directional and sustainable movement, I mean movement of more than 50, 60 pips, sometimes 100, 200 pips, and such a movement can last several hours. So typically, with a big deviation, a news release has an impact between 3 and 6 hours after the news release. When there is no big surprise, even a small deviation will not create a movement large enough to be interestingly tradable. So we have just to wait now around 7.5 minutes to have the two news releases. Concerning the US dollar non-farm payroll, even in the case of a big surprise, we will have to wait a minimum of 2 minutes, because 2 minutes after the news release, there is the release of the revision of the previous months. And sometimes this can create a surprise in the opposite direction. I don't get the revisions, but we will see on the chart the type of reaction the market will have. And so we will consider the movement to be traded in accordance with this scenario. If we don't get an interesting scenario, so I will, as Craig has explained, I will force a trade just to illustrate our trade risk management approach, showing that in the case of a bad trade, so the trade risk management we have helps to minimize the loss we will have on a losing trade. So, but let's be positive and let's hope, even if I'm used to say hope is not a strategy, let's hope we will have good deviations on either the US dollar non-farm payroll or the CAD non-farm payroll. And so in 6.5 minutes approximately, we can check for the result of the news release on the Forex calendar, economical Forex calendar of Forex Factory. We have already the green button, so this means that in less than 10 minutes we'll have the data, and so we have just to wait. Concerning the US dollar non-farm payroll, if we have a big deviation, and if we have also the average hourly earnings month of the month in agreement, this means in the case of a positive deviation, we have a number here larger than the forecast, or in the case of a negative deviation, big enough negative deviation, and we have an average hourly earnings smaller than the forecast, this will reinforce the non-farm payroll itself. So we have just to wait for the moment we have the news release. In the meantime, so let me show also what we have on our website, the maxtrading.com/newswatch. Every week we update the list of the coming week for the relevant news release, and only the news release indicated as major are important news release. So there are in fact less news than a calendar can present. And so we have a lot of information about the news release. At the bottom of the page you will have, if you are interested, a small explanation how to interpret these information we give in our calendar. Then we also produce the top 10 list pairs, which are the 10 pairs which moves the best. In fact, we can see that for the last update, last Saturday, the pound Kiwi, the pound CAD, the pound Aussie, and so on were the best moving pairs. And so they were the best moving pairs along the 4 to 6 last weeks. And so consequently, we have a high probability for these pairs to be also the best moving pairs for the coming week. This list will be updated this Saturday. And then we have also, every Saturday, we propose here a list of pairs to monitor and to trade, depending on the news release, for every day of the week. So we can see that today the suggested pairs are the pound CAD, the pound US dollar, the pound Kiwi, the pound Aussie, and the pound yen. So, sorry. I hope my voice will last until the end of this session. So 5 pairs to monitor. I have added 2 pairs. I have added the Euro US dollar and the Euro Kiwi, because the Euro US dollar is always an important pair to trade, and the Euro Kiwi because the Euro Kiwi in our top 10 list pair is a rather volatile pair, as you can see in the list here. It's here. So. And you can access that page so freely, simply by using, let me show you the email address here. So www.maxtradingsystem.com/newswatch. On my chart, you will see that I have also some horizontal lines. For example, if I take the pound CAD, we have a white horizontal line, but there are other lines. These represent max price levels. They are levels of supply and demand. On the chart, you can see how the CAD has recently nicely reacted to that level. And so we produce these levels also every weekend. If we take, for example, the pound Kiwi, you see here we have 2 levels, one of supply, one of demand, and you can see how the price has moved nicely between these 2 levels. And so we will update these levels this Saturday, so tomorrow or after tomorrow, this weekend. And so we produce these levels every week, and they are valid for the rest of the week. And these levels are used in our max methodology to confirm our entries, but also they help for our exit. If there is the opportunity, today I will illustrate how these levels are used. So the news will come very soon, now in 1.5 minutes. So on our chart, we have I have a simplified version of our max template, but it's enough to consider tradable situation. And we use also constant range bar chart to have more details. So in the price action, because when we are in appropriate situations, so we can scale in, and when we scale in, it's always interesting to have more details about the structure the price is doing. So news in 30 seconds. Let me display the calendar here. I will reduce the size of the calendar in order to observe the first reaction the price may have. And you can see that some prices becomes a bit nervous just in front of the news release. So not yet. Okay, 312K, big number for the non-farm payroll on the US dollar, but we still need to wait for the unemployment rate. Positive average hourly earnings, so that's good. Or bad unemployment rate. So we don't have the number in agreement. For the CAD, we don't have a deviation big enough, even if we have a smaller unemployment rate. We are not in a good tradable situation. Let's look at the scenario here. So for the CAD, we should have employment change larger than 10K. It is not the case. And for the non-farm payroll, we should have seen, for the US dollar, we should have seen employment rate smaller than 3.6. So we don't have numbers in agreement. So for me, today, even if we have a big non-farm payroll itself, it's not a tradable situation. So the criteria are not fulfilled. This is why we have rules. And so what I will do is, as soon as the volatility will slow down, I will just force a trade, just to illustrate the trade risk management we are using within the MAX. And you can see that we don't have the usual big spike we are used to say in the case of a big deviation. On the pound Kiwi we have 21 pips, on the pound yen we have here 13 pips, on the pound CAD here we have 34 pips, on the pound US dollar we have 26 pips, so not a big movement. So we can check quickly the other pair, for example the pound Aussie. We have a similar situation. We have the euro US dollar, a similar situation, so not a big volatility, and so not an ideal tradable situation. So let's wait a few moments to see the volatility slowing down. Even on the currency meter, so we are using, we don't have a very clear picture. We have lots of currencies here, the Kiwi, the yen, the pound, the Swiss, which are neutral to a little bit weak. We have the Aussie, which is a bit strong, and the CAD, which is neutral, and the US dollar, which is neutral. So not a very clear situation. So only the pound, the Aussie, so seems to be strengthening, which may be interesting if we have the pound continuing to weaken. Maybe the pound Aussie could be an opportunity to consider, even if the circumstances are not appropriate. So let's consider an entry setup on the pound Aussie. With the Aussie strengthening and the pound weakening, we should expect a short setup. For the moment the price is retracing, so we have to wait for the price to come back to the downside. So I will prepare my max trade monitor, which is our EA, to execute our orders. So max trade monitor here, and I will attach it to the pound Aussie, taking 1% risk, 1%, and I will not make the notation on the chart. So here the button panel, and here our information panel. So Now let's check if this candle is a valid setup. We have here, yeah, it is a valid setup. This is a valid setup, and so my entry would be in this area. I will draw an horizontal line on my entry level, so we don't need to be in a hurry. So at 4.2 on this level. Okay, sell. Oh, I have forgotten to adjust my stop loss. My stop loss is way too large. I went a little too fast. I should have placed my stop loss around this area. So my stop loss is a bit too large. Anyway, this doesn't change the concept of the trade risk management. So now that we are in a trade, we have to handle the trade. Let me explain what we have on the chart here. We have the price, of course, and then we have these orange and yellow lines, which are called the ETF lines, which give us the direction to trade in relationship with this companion indicator in red and green, which give us the trend to follow. And so it is red, so we have to consider short trade, which is in agreement with what the currency meter are telling us. And you can see here when I say the numbers are not in agreement, so the movement are much more unpredictable. And as soon as the entry has been made, this is not due to the entry, of course, but the price can reverse very quickly. We are in a choppy mode. And so the price has reversed. This happens very frequently when we are in a choppy mode and when we don't have the appropriate conditions for a trade. And so this is why we advise to never consider trading the non-farm payroll when the appropriate numbers are not released. And with choppy behavior, so everything can happen. And we have a special way to trade a choppy, what we call a choppy mode. Let me draw a vertical line here, a green one, which is the convention notations we use for our entry. So this was our entry setup candle and our entry here. Now, when we are in a trade, we have a set of rules telling us when the trade must be closed, partially or totally. And so I will come back to that aspect in a moment, but I would like to consider also here the pound US dollar or the euro US dollar. Let me check the euro US dollar. Yeah, the euro US dollar seems interesting too. Just to illustrate, and let me attach the max trade monitor here to it. Okay, and so we may have, no, not yet here, we have to wait. So, I will widen here this chart, and I will widen here this chart here. Okay, in such a way I will have a look on both charts. So, on this pound Aussie pair, so remember I have made my entry here, and very soon after on this candle we have an exit setup bar. And so what we teach to our student is when we have an exit setup bar, so and the price follow through and hit an exit level. So whenever we have an exit setup bar, we have to define an exit level. And so if the price follow through and hit that level, we close half of the trade. So Another possibility is to use what I call a discretionary decision. A discretionary decision is a way to be a little more flexible with the exit. And this means that this is what I do myself. Because I'm using a very small risk per trade, maximum 1%, and this is an important condition, so I can sustain the fact that, or I can accept the fact that should the price go against my trade and hit my stop loss, I will have a full loss, but it is still a small loss, 1%. And so in such a case, because the loss is a small one, I will not close half of my trade on a first exit setup. I will close half of my trade if my profit is large enough. And with a profit large enough, we have criteria to define what a profit large enough means. So on the long-term perspective, this is based on the statistic made on my own trade for many years now. At the end of the year, we increase the profits of the trade by a good amount, even if the losing trade sometimes are larger losing trades. So let's pay attention here. We may have possibly an entry setup. Let me check. No, it is not a valid entry setup. We have to wait. In terms of the currency meter, nothing has changed for the moment. So if this candle closes as a red candle, maybe it will be an entry setup. But you will see, if the conditions are appropriate, how paying attention to all the detail the price is doing, we will have a trade risk management which is fine-tuned, in fact, and limiting the loss in the case of losing trade, which happens very often when we force a trade. And this is why we discourage our students, of course, to force a trade. Never force a trade. And just to illustrate the difference between the two approaches, using the rules in a strict way or using my discretionary decision. So on the pound Aussie, I will use my discretionary decision, and on the euro US dollar, if the trade is opened, I will use the strict rules. So you can see here on the euro US dollar, I have placed my stop loss above this max price level. The blue line is not a max price level. It is just for me to pinpoint my entries and my exit levels. This red candle will be an entry setup bar if it closes as a red candle. Yeah, it is, and so I have to define my entry level at 3.7. 3.7 will be right here. Okay, sell. Now the trade is opened also on the euro US dollar. And so I will continue to handle the trade on the pound Aussie with my discretionary decision. Here, for the euro US dollar, I will handle the trade using the rules in a very strict way, without any discretionary decision. When I say discretionary decision, this does not mean the possibility to introduce subjectivity in the trade or in the decision. The decision is always based on a trade risk management argument. So the idea behind that argument is the risk must be acceptable. The additional risk must be acceptable. So the stop loss size is here around 25 pips, which is a bit large compared to what we see usually, but the volatility is pretty much large. So the price seems to move downward. The euro is still losing strength. The US dollar is gaining strength. So we may have a possibility for the price to go downward. Yeah, the Kiwi US dollar is also an opportunity to short. Dan, you are right. But in this kind of presentation, when I have to give also explanations, so it's difficult to handle more than two pairs simultaneously. Normally, you remember I have said I have forgotten to adjust my stop loss. So I should have set my stop loss around this area. So if the price comes to this area and hit this level, I will consider this trade is a losing trade. I will not wait for the price to go to this stop loss here, which was way too large. Okay. Let's be fair about that. So this means my stop loss should have been around, let's say 28 pips plus the spread. The spread is 2 pips, so let's say 30 pips. The minimum profit should be 15 pips. So 15 pips plus the spread, 17 pips would be approximately on this level, a bit higher. So here, there. Okay. So this means for the pound Aussie, using my discretionary decision, my first profit must be on this level or below this level. So on the euro US dollar, this blue candle could be possibly, yes, if it closes as a blue candle, an exit setup given by one of our indicators here, the Stochastic RSI. But we have to wait for the candle to close. Okay, now the price has moved enough. I can begin to reduce my stop loss, so here. And I will reduce the true stop loss here, around this area, reducing the risk, importantly in this case because my stop loss was too large. We still have the 2 units for the 2 trades. Okay, we have an exit setup yes here, and so, but the price continued to move down, but my exit level would be too high compared to my minimum exit level, so, or desired profit. So no MX for the moment. We have, however, a situation, we have another type of exit setup here. So if the price move at this level, here I make an MX here. The profit is large enough, even if it is not what I desire, it is still 15 pips, 12 pips, 13 pips, minus the spread. It's acceptable, but I had a very, very important here exit criteria, and this helps in fact to reduce importantly the risk on the trade. You can see now at worst on the stop loss, the risk, the trade is risk-free. It's break-even, in fact. So a small profit has been taken on the first MX. We are still left with a second unit, so half of the trade, but globally the trade is break-even. Now I have to pay attention to the possibility to reduce my stop loss on the euro US dollar. Let me check if I can do that. Yes, I can reduce the stop loss approximately in this area. And you will see this contribute to reduce by 1/5 the risk on this trade. We still have no exit set up on the euro US dollar. And on the pound US dollar, whenever I will have the opportunity to reduce my stop loss, I will do that. Now, if this candle closes as a blue candle on the euro US dollar, this will be an exit setup bar. If it closes as a red candle, so it will not be an exit setup bar. Now, concerning the pound Aussie, because we have already closed half of the trade, there are several ways to close the second half of the trade. The first possibility is on the next exit setup, we will close the second unit of the trade. The second possibility is to wait for the trend reversal or a movement invalidation or a movement exhaustion. So we have several ways to consider when we have to make a final exit. The advantage of closing the trade on the next exit setup is if the trend still persists, we will have the opportunity to open a new trade. The advantage of closing the trade on the movement invalidation or the trend reversal is usually we will get a larger profit on the trade, making less trades. So there are advantages and disadvantages for each cases, but all are pretty much similar on the long term. So this blue candle now is indeed an exit setup bar, and if my price goes on this level here at 736 here, I will close one unit of my trade. So on this level with the blue line. In the meantime, I can reduce further my stop loss on the pound Aussie, locking more profits on the trade. Now I'm locking profit on the second unit. You can see that here. Now, these numbers are very small because my initial stop loss, remember, was very high. So it should have been half of the size. So we will multiply the numbers by 2 at the end of the trade, just to have a more realistic idea of the result of this trade. So the price does not follow through in the retracement, at least for the moment, but everything can happen, of course. And with each candle, I always consider to reduce eventually the risk on the trade. You see now on the Euro US dollar, the risk has been nicely reduced. On the pound Aussie, I can tighten further my stop loss just almost at the break even here, looking more profits on the second unit. And the reduction of the risk can be made bar by bar. And so bar by bar, I evaluate if I can tighten my stop loss as long as my trade is opened. So now the price is ranging in this area. We have no other exit setup triggering. So we need to be patient. The price is still in a choppy mode. We can see that obviously by the price behavior. No opportunity to tighten further my stop loss for the moment here. And on the Euro US dollar, neither. So our exit level is still holding here. So if the price move on and hit that level, I will close 1 unit of the trade. Adrian, I have chosen these two pairs based on my currency meter. So the US dollar was gaining strength, the euro was losing strength, so I have the euro US dollar was a good choice. The Aussie was gaining strength, the pound was losing strength, so the pound Aussie at that moment was a good opportunity too. So in the case of an important event in the market, I always check my currency meter to choose among the pairs I'm monitoring, the pairs I will trade. Most of the time, not always, but most of the time, the choice we made with the currency meter is a good choice. It does not mean it is an optimal choice, but it is very often a good choice. And sometimes it's not necessarily the best choice, of course. And but this works nice when we have big surprises in the news release. Okay. So the price resumes now the down move. Let me check on my complete template these two pairs to see. Yeah, you can see here in the area where I have made my MX, and I'm talking here to our max graduate. So we were on TT line rejection, so in the time bar chart. I still cannot adjust my stop loss on the pound Aussie. Now we may have possibly here, let me check, no, we don't have an exit setup, and nothing for the moment on the euro US dollar. I really apologize. I have a problem with my throat and that cold, so I'm often coughing. So I try to not disturb you with that by closing my mic. Now, if this candle, okay, this candle closes above this magenta line, this is for me an exit setup bar, and so here on this level, I will make 5-8 here. Here, I will make my x66. Okay, x66. I have closed that trade. A small profit on the pound OZ, 0.16%. Remember, my stop loss was too far away. Normally, my stop loss should have been here, so it should have been divided by 2. So the result on this trade, more realistically, is 0.32%. So let's write on the chart here, plus 0.32%. And we are still in the euro US dollar with our 2 open units. Adrian, remember the scenario I have explained. Now let me check this candle first. We have again an exit setup bar. I can tighten further my exit level here at 725. 725 will be here. Okay. So this blue candle is an exit setup bar. If the price hit that level, I will make an MX on the euro US dollar. MX. So the price has hit my MX level, so I have closed 1 unit. You can see that making that MX at almost break even. So it was exactly at break even. So the risk now on the entire trade is 1/3 of 1%. It has been well reduced. So this means that should this trade be closed as a losing trade, it will be a small loss. So now to come back to your question, Adrian, the non-farm payroll was a good number, but the unemployment rate was not good, was worst. And so in such a case, we have these two numbers in opposition. This is not the conditions to have a sustainable and directional movement. To have tradable situation with the non-farm payroll, we need to have these two numbers in agreement. A larger number for the non-farm payroll, a smaller number for the unemployment rate. This means we can go long the US dollar. On the contrary, a very bad number on the non-farm payroll and a larger number on the unemployment rate, this means that we can short the US dollar. The two numbers must be in agreement to have tradable situations. So, in terms of trend trading, okay? Yeah, the price is not really falling, so the price is more in a choppy movement. So, with the rumors we have in the market, the sentiment is, even if for me it is not a good pretext, for me some big traders probably are waiting the comment Powell will make in around 1 hour and 10 minutes in a panel discussion, even if I don't believe a panel discussion is an appropriate place for Powell to make comments about the economy or the monetary policy. So, but clearly the market is waiting. So, The bias with the pound Aussie is still a downtrend, and so if we have another entry setup, we can consider another trade. But I will not do that because the situation was not tradable. I was just handling that trade to illustrate our trade risk management. One using my discretionary situation, and one using the strict rules. And so this one has been closed with a profit, not a big profit, a small profit, but we don't have good movements. And this one, we don't know yet. We are still having a small risk on the trade, but you see, at worst, the loss will be a small one. And by the way, you can see that the two trades in the worst situation will compensate, will balance. Oh, Guan, yes, I know, I know. Thanks for the information anyway. No, in fact, as you know, in my workout, I'm working every day. And yesterday it was really freezing. And so I have got a cold with that freezing temperature. I can tighten a little bit my stop loss, not a big amount, but large enough now to reduce a little bit my risk on this trade and to have a loss smaller than this winning trade. Let me take a sip of water. This will soften my throat. Just a moment. The US dollar seems to regain some strength and the euro to lose some strength. You see the pound Aussie, this candle was another entry setup candle, so a second trade was available. But the context to take this trade is not appropriate. So it is just to illustrate what we can do with the max. And in these circumstances, you can always consider trading these movements as scalp trades. And so we have a version of our indicator which are more aggressive simply by using more aggressive settings. My settings are standard settings for the moment, but with more aggressive settings, we can cut the movement a little bit earlier, sometimes 1 bar, sometimes 2 bars earlier, and scalp this movement. This means closing the trade after a few pips profits. And you can do several such scalp trade during the day. So now let's concentrate on the euro-US dollar. We are approaching a level here, and so we will have to pay attention to this level. This can give an exit setup. But we have to wait for this candle to close. And you see here the price is moving. Now the entry would have been somewhat here, and the price would have already moved around. You see, not a lot, even not 10 pips. Oh, I know, Jan, but yesterday in my workout, so I was at some moment, because of a big effort, I was sweating a lot, and I think this is the reason why I have caught that small cold. It is not a big cold, it is a small cold. Okay, Randy, have a great week. Have a great weekend first and then a great week. Okay, this blue candle may be possibly another exit setup bar if it closes as a blue candle. In the pound Aussie, most probably also. Oh, I don't have that level done on my chart. Perhaps you have added another level because I know you are making your levels yourself. Okay, this blue candle is an exit setup bar, and so my exit will be here, 691, 691, right on this level. On the pound Aussie, should the trade be taken, this would have been also an exit setup bar, and so the exit would have been in this area. The exit would have been made with, again, a very small profit, so 4 or 5 pips. In the meantime, I can reduce somewhat my stop loss in this area, reducing further the risk on the pair to a very tiny amount now. And this level for my exit will stay valid until the price hits it or I get a better exit level. And so sometimes it requires a lot of patience in a choppy movement, in a choppy behavior, to close a trade and to possibly make a decent profit. But most of the time, the result in a choppy mode is a small result, either a small loss or small profits. Unless, because this may always happen, unless at some moment the trend starts and the price leave the choppy mode, in which case, if we are still in that trend with an open trade, so the result would be much more interesting. There are several ways to be more aggressive in a scalp mode. The first way, as I have explained, is to use more aggressive settings for our ETF lines and possibly our slow bias directional line. And the second possibility is to reduce the size of our constant trend bar chart. And we can do that on the fly. For example, if I consider I will not disturb the chart here for the euro US dollar, but let's consider, for example, the pound Aussie. If I want to reduce the size of the constant range bar, I can do that on the fly that way, and so we can see the scalp we could have made here on this down portion of the trade. And so an entry setup would have been so in this candle, and so a first exit in this area with a 10 pips profit, and a second exit most probably in the same area, so 20 pips profit. So we can do that on the fly in a very easy way. And so depending what kind of situation you expect, so you can choose to be more aggressive or less aggressive, more conservative. So more oriented to a scalp trade or more oriented to a trend trade. Okay, we have another candle closing. Cannot adjust the stop loss here, but we may have an exit setup. Yeah, in this area, I will close the trade because we have an exit rule here. And this level I have defined now was better than the previous one. So, but now this is the valid. Okay, XXX here. I close the trade because the price has hit my level, and so this trade has been closed with a tiny profit. So 0.17%. So not a big one, but it is not a surprise in a choppy mode. This is what we get usually. And now what we do, if the conditions are appropriate, we wait for another trade opportunity. And so you can see that if we are extremely careful, even in a choppy mode, we can make small trades with small profits. But with just two trades here, if we add up the profits on the two trades, these two trades have made so 0.5% profit in total, approximately. Okay, and if you are able every day to make 0.5% profit on average, I don't say it is easy to do. Okay, but when you have appropriate tools, when you understand the context to take the trade and to handle the trade, making on average 0.5% profit every day is not so so difficult. And if you trade every day, during the year, this may be difficult, on the contrary. But if you trade every day of the year and you make every day on average 0.5% profit, at the end of the year, if you make no withdrawal, and you compound your result over time, so at the end of the year, you multiply your account by 3, which is in 1 year a good performance for your trading account with a small profits per day, and it is independent of the number of trades you can consider. That result may be made in 1 trade, 2 trades, 3 trades if necessary. You can have 10 trades. Among these 10 trades, you may have 4 winning trades, 3 losing trades, and 2 and the rest break-even trade, and still make your profit. The winning rate doesn't matter. What is important is at the end of the day, have you made enough profits or not? This is what counts at the end of the day. It's not the winning rate. The winning rate is just a question to satisfy the trader's ego. But when we trade, we have to set our ego on the side and to focus on the risk management. If we focus on the risk management, even when we don't have appropriate conditions, but if we use all the rules we have and concepts we have at our disposal, we can still catch some decent profit. So, any questions about what I have illustrated today? So I have shown 2 ways to handle the trade. One with what I call my discretionary decision in terms of taking the first profit, and the second one by applying the rule in a very strict way with no discretionary decision. By the way, we have another opportunity here, so happening, but considering this time I will not take it, and we have another opportunity here on the pound Aussie. So any questions about what I have indicated, what I have shown today? Any questions? and you can see the price continue to go downward. So the trend is still the downtrend. The US dollar is gaining some strength. It's not really strong, but gaining some strength. The euro is weakening. The pound is again weakening, and the Aussie is again strengthening. Let me show you in the currency meter. So this is the Aussie. So the Aussie is strengthening. We have also the CAD strengthening. The US dollar is strengthening. This is the US dollar. The pound in red is weakening. The euro in green is weakening. So we have technically appropriate conditions to continue this downtrend. But the news release was not appropriate to really consider trend trading. Okay? Oh, sorry. You know, Dan, being cool in a trade is just a matter of practice and experience. Once you know what to expect with your trade, so there is no reason to be stressed when you take a trade. Never be influenced by the end result of one unique trade or a set of trades. You need to have a good knowledge of what to expect from your trading system. And to have a good idea, as you know, you need to practice enough and to make enough trade before evaluating your own trading approach. 200 trades is a strict minimum. With 200 trades, you will have a good idea of what you can expect with an accuracy of approximately 10%. This means that if you get, for example, on 200 trades, let's say a winning rate of 60%, and let's say a reward to risk ratio of 1R, just as two examples, okay? The numbers may be different depending on each trader. So let's say 60% winning rate and 1R as the reward, the average reward to risk ratio. These are the numbers you can expect in the future with an accuracy of 10%. This means that your future winning rate can fluctuate between 60% plus or minus 10% of 60%. So this plus or minus 6%. And your reward to risk ratio will fluctuate around 1R plus or minus 10% of 1R, so plus or minus 0.1R. And with these numbers, as I have shown, so in our Max mini course on the advanced money management approach, using Monte Carlo simulation, so you can see if your future trade will be profitable or not with a high probability. And this kind of detailed analysis of your trade will help you also to pinpoint in which directions you need to improve your trading skills. Do you need to develop more patience in order to catch a larger portion of a trend when you are in a trend condition? Do you need to pay much more attention to the way to reduce the risk per trade by adjusting more regularly your stop loss? Do you need to keep a stop loss large enough? So do you apply the rules correctly to keep your stop loss large enough to avoid being stopped out too early in the case of an increase of the volatility, because the volatility can always increase temporarily in an important way. And so if your stop loss is too tight, which is a temptation used by many traders, you can be stopped out too early. And so there are several directions you can improve by practicing, by changing some habits in order to improve either your winning rate and or your reward to risk ratio. But instead of trying to improve one or the other, you have to improve your expectancy. improving the expectancy, so is the best way to improve your result over the long term. So, and then an important factor to take into account is also the frequency of your trades, because if you combine your expectancy with the frequency of your trade, you will get an idea of the financial performance you will get, for example, every month on average. And so once you know that, there is no need to panic. You know, I'm facing sometimes 2 trades, 3 trades, 4 trades, which end as losing trades. And then I don't feel hurt by the fact that I have losing trades made of 4 losing trades. I have had in the past 6 losing trades in a row, and I know for sure that one day I will have 7 losing trades in a row, 8 losing trades in a row, up to 10 losing trades in a row. This will happen for sure. When? I don't know. Perhaps Monday, perhaps in 10 years. But this will happen. Okay? And so once you know what you may expect, also in terms of worst case scenario, you can build your money management to survive these worst case scenario. Because in fact, to help increase your trading account, you have to survive your drawdowns. You have to minimize your drawdowns and to recover your drawdowns as fast as possible. This means you need to keep your drawdowns as small as possible. And this can be done, first of all, by having a good trade risk management approach, and then by better picking your trade in agreement with the global context. If you choose your trade in agreement with the global context, you will not only increase your winning rate, but you will also decrease your losing trades, and you will decrease the loss of the losing trades. Okay, this is very important. You can improve your result on several directions simultaneously, and a small incremental improvement can produce huge result at the end of the year. So, okay. Any other questions? I'm sorry, but my throat is weaker and weaker. We will make this session a little shorter for today. So, any questions? So the aim was just to show how the trade risk management helps to minimize, in the case of losing trade, the situation. But it happened that both trades went good. So, but sometimes I like to have a losing trade just to show that the loss is a small loss. So. Just to give some more information, so in terms of our, here, let me show again our max pages. So these informations are available so every week, and they are freely available. And so just use that address, so www.maxtradingsystem.com/newswatch. And so the max price levels also are available. There are 2 formula for these max price levels. There is a free version. We distribute the levels every week freely for 4 pairs: the Euro US dollar, the Euro AUD, the AUD yen, and the pound yen. And we have a larger set of instruments with a monthly fee, but a small monthly fee. We have between 15 and 18 pairs, plus some indices like the S&P 500, the Dow Jones, the Nasdaq, the DAX, the FTSE 100, gold, crude oil, the Bitcoin also. And so this make approximately 30 tradable instruments for which I produce the levels, and so every weekend, so the Sunday at the end of my afternoon or beginning of my evening, I send these levels. So 4 free pairs for the free subscription and around 30 instruments for the paying version. So, and you can contact Craig to know how to access these levels. And so I think that Craig has mentioned his email address. If not, he will surely repeat his email address. Otherwise, you can always contact Craig through our web page. So there is a contact link here. Let me show you that. When you go on the home page, I think on the home page there is a contact. Yeah, here there is a contact field. So put your first name, your email address, and so you can contact Craig that way, or perhaps you can chat with him also through Skype if you have Skype. So there are several ways to contact Craig. Oh, Charles, thank you. Thanks, Adrian. Thanks, Adrian. Oh, I will do another work today. So, and by making several times my workout every day. So, this is a nice way to cure also. And I have to make my workouts every day. So, yeah, the pound CAD may be a good opportunity. Indeed, the CAD, the CAD is, it's losing strength for the moment, but the pound is still not so weak. So now the pound becomes pretty much neutral. So it will be more and more difficult now for the rest of the day, most probably, except if there is another event which may influence the market. But my opinion is if nothing else happens, so the rest of the day will be a rather calm day. So, for those of you who are wondering why we have had that important drop in the yen 2 days ago, several hundred pips, depending on the pairs. So the reasons are multiple. So many reasons have been evoked. So fears on the future of Apple in China, fears on the Aussie, fears for the situations in Europe, in Turkey, and so on. But my opinion is the market this week has been a very tiny market because the big boys are only progressively coming back in the market. Next week they will be present, but this week the volumes were very, very tiny. And when we are in a tiny volume situation, any order, whatever its size, can create a deep movement to the upside or to the downside. Because what may happen, depending where stop losses are located along the price, or depending where stop orders are located, what may happen is a cascade of order. One order is executed, the spread for the bid and the ask is adjusted, and this new spread hits the next order, and then the next order, and then the next order. And so one initial order, even a small order, can generate a cascade of order in a very fast way. And my opinion is this is what we have seen in this, what is called flash crash in the Forex. So be aware when you read some comments by some so-said specialists, the reasons are not necessarily the right reasons. So small volumes are often the good explanations of big movements. So, Yeah, indeed, Adrian. It was after the U.S. closed and during the dead period before the Open, the Tokyo Open, and so not only we were in a period of usual tiny volume, but also during a time period when there was virtually no volume at all. And so this has amplified the movement in that cascade of orders. So this is why it's never a good idea to trade when we know that the volumes are really, really tiny. To have an idea if the volumes are tiny, you can also check the futures market, for example, for the currencies. And so you will see that the volume were really, really very, very small. So, okay. Just to finish, so here, for the euro-US dollar, for example, so I have made my second exit. So on the next exit setup, after the first exit setup. But if you remember, I have also explained that an alternative way to close the second unit, so the second half of the trade, is to wait either for a movement exhaustion, invalidation, or a trend reversal. We are still in a downtrend. So for traders who have a lot of patience, so it is possible to stay in this trade until the trend reverses. So there are different ways to consider so how to make a final close, especially when the trade is at break even. It was already at break even with the first exit and the stop loss adjustment. And so look here, should the trade still be open, the stop loss could have been adjusted in this area approximately, and we have to compare that with the entry level, which was here. So the risk on the second unit would have been really small, and so the probability to bank a profit would have been, a better profit would have been now larger and larger and larger. But time is flying, and so the timing aspect is also an important aspect, and so this is something to take also into account. Usually between the Frankfurt and the London close, we see the movement exhaustion. And so this is very often a good moment to consider closing the trade before the trend reversal. So there are different ways to consider the final close of the trade, and so all these details, all these possibilities so are taught in our MAX courses. So yeah, indeed, Dan, you can do that. For those who are much more experienced in trading, so when we have usually from the London Open, if you consider the entire chart, for example, from the London Open was around this area at 10 on my chart. So the trend, the real trend was this one. This is what we call a true trend. At that moment, it is a true trend. And so with a true trend, we have a 75% probability for this trend sorry, to exhaust between the Frankfurt and the London close. After the London close, we see usually a retracement. Not necessarily a big retracement, but some retracement. It depends on the conditions. So today, for example, may be an ideal day because there was no good condition with the non-farm payroll, either for the US dollar or for the CAD. Probably the retracement will be interesting, but this requires more experience from the traders to trade these retracements. So because the movements are not necessarily big movements. So okay. So that was an interesting remark, Dan. Indeed, good remark. And I know that this is one of your preferred approach, depending on your time constraints, of course. Okay, this session will be a little smaller than usual, so just 15 minutes to 30 minutes shorter than usual. So thank you very much for your participation. If you have further questions, feel free to contact Craig. And then I wish you a great weekend. And so see you on one of our next activity, either another open house session or one of our Max courses. So, and that being said, bye everyone, and in the meantime, take care.